Welcome to Finance Revealed. Watch the complete video to discover new market secrets. Subscribe now.
We deserve to be in the 50,000-60,000 range. Once we break 42, I mean, that's the long-term sort of line in the sand of the channel we've been playing at. And it's just really just a big gap from there to 50. 42 to 50 is just a gap. So if we break 42, it's not going to be much time to get to 50. So, yeah.
And what you think we'll consolidate again around 50, 60 for a while?
Yeah, I think we'll take a little bit more time to slice through. Like, I wouldn't expect us to slice right through, but anything can happen. Yeah, I kind of expect that we'd just retest some of that zone in there because we spent so long playing around in that zone of discovering 50 to 60. And then, wow, if we break all-time high from that was at 64. What was the all-time high? I can't even remember.
It was around 64, yeah. I mean, I got the chart.
If we break that, then we'll be off to the races again. And having done that with a very nice, long, kind of 2 to 3 month consolidation back down to test lows. It's a very interesting kind of... it's definitely one of these things I've never seen before on the blockchain, the Bitcoin price action, where, instead of a dump, a wick down, rejects, and it goes back up. The people dumping were just so capitalized that they dumped so many coins that the people that buying the dip, which was the plebs, everybody, took a while. It took 2 months to absorb it to the point that the supply shock.
So one of the things I'm really interested in is that, are the coins becoming more distributed? Someone like Mike will say that, and even Elon Musk, with the amounts they've bought, they create these little consolidations. But generally speaking, are you finding that there is a whale concentration, or are we seeing a wider distribution of coins?
Oh, this is great, because this is what I've been researching the last 2 to 3 weeks, keeping off Twitter trolls, hiding in research from the amount of bearish trolls out there the last few months. But I tweeted a little bit of it. And, like a lot of the analysis you see, particularly from Twitter, is really bad use of data and not understanding how the network actually behaves. Like they say, the whales hold huge amounts and the whales are pumping and dumping and they're getting richer. And some of the things you have to do now, because the game's really quite sophisticated if you're going to do on-chain. Glassnode do just a huge amount of data science and forensics to cluster all the addresses together to resolve to the tens of millions of individuals that they can see on the blockchain. And then we can then measure their balances, right? But then that data is given out if you subscribe to their premium platform, so that you can have a look at it. And even that shows misleading visuals, because now you have to figure out, okay, the whales, well, the biggest whales I know, if you look at the blockchain, they're the exchanges that hold hundreds of thousands. And actually some of the exchanges only hold tens of thousands and some only hold thousands. And even one or two hold less than 1,000 Bitcoins in their hot and cold storage, which will just look like one whale. So we need to get all of their addresses labeled and backtraced and whatnot, and then correct for that. And then you also have to correct for this new thing, which is Grayscale and Purpose ETF in Canada and 3IQ, and these new ETFs coming in. They're stacking coins as an instrument that's being held by many people. So, I did a lot of work getting all of that data, scraping the web and reading financial reports from Grayscale going back to, 2013. Got their balances and now have corrected for Grayscale and all the ETFs, all the exchanges, all the miners. And when you get all of that adjusted for, you get this picture, right? And the picture is whales in a 10-year downtrend of holdings. They at the very peak, they held 58%, near 60% of the network coins. And today they hold 26%. And it's just steady downwards, and it goes downwards steeper every bull run. So they take the opportunity to sell into every rally. I think you would if you were worth 1,000 Bitcoins. Minimum is what, $30 million. So these whales are probably, 30, 100, multiple $100 million, and they're diversifying out. And actually, there's not a lot of signal when you look at what whales are doing, because they're just selling out. And then on the other hand, on the other end of the spectrum, you can look at the shrimps, the less than 1 Bitcoin holders, and the crabs, which is under 10. And they're like growing consistently and smoothly. So if you were to look at what I call the minnows, the people that hold less than 10 Bitcoins, they already now hold 13.7% of the network versus the whales that hold 26. So they hold kind of half what the whales hold, but that isn't the full picture, right? Because the exchanges hold the coins for about 150 million people. Presumably most of retail hold coins. They prefer to hold their coins on exchanges. You don't see very large high net worth individuals putting coins on exchanges. It's just not done because it's too risky. But like if you add the coins exchanges have and what we see on chain, already that's equivalent to the whales. And then you can count the ETS on top, and it's above the whale. So there's a fair chance, the small holders have more control of the network than the largest, the people with 1,000 Bitcoins and above. And the guys in the middle, sort of in the 10 to 1,000 Bitcoins, they're sort of sideways downwards. They're also losing their control to the small guys. The interesting thing for this cycle is the 100 Bitcoin to 1,000 Bitcoin strata. And that's the kind of high net worth individuals and the smallish hedge funds. They actually bought tons of Bitcoins, and there's been an outlier bump. And that bump started around $30,000 in January. It was, let me zoom in. I think, okay. So that bump we saw with dolphins and sharks, 100 Bitcoins upwards, but not the whales, that started to climb after Tesla started buying Bitcoin. It was very interesting. So it's interesting in that when Elon Musk threw FUD, there was a lot of selling as well. But those guys didn't sell that much. They still hold a lot of supply. But overall, the trend is looking absolutely great. I'm asking Raphael at Glassnode, CTO over there, to do a little bit of extra work in the counts of these different holders to get the populations. And if I can get that data, then I can run this thing called Gini coefficient across Bitcoin across the last 12 years, which is cool. That's the wealth distribution that economists use inside an economy. So we can start to calculate that once I get that data. I think they're working on it now. So that'll be really interesting because from what I've seen, there's no other coin network that's even close to this level of distribution. It's a really strong argument. The distribution in Bitcoin is, it's super important because if you control a lot of the asset, then it ceases to be, a decentralized network. It can be pushed around by, like gold, gold failed because it was too centralized in holdings. The governments held it. They used it to back money. And then when those central entities lost control of their gold, mainly America, right? They lost control of the gold, and then they decoupled us from the gold standard, and now we've got fiat. Stuff, weird stuff can happen when you've got like large pockets of control of the coins. And so, yeah, Bitcoin's like amazing right now, what I'm seeing on chain. Very heartening.
Bitcoin options, Bitcoin Live, Bitcoin Update, Bitcoin XRP, Bitcoin Wallet, Bitcoin Owner, Bitcoin History, Bitcoin News Today, Bitcoin Dominance, Bitcoin Bitcoin ATM, Bitcoin app, Bitcoin Cash,